Welcome everyone to another episode of Give Me Some Truth. This is the international edition of Give Me Some Truth. I'm Sil Michelin, joined by Stan Farmer and Keith Poniwaz. And our topic today is going to be charitable gifting. And specifically, how to think about making a charitable donation as a U.S. expat residing abroad. So there's kind of a lot to unpack with this topic, so we're going to try to keep it fairly high level, fairly simple. I think it's fair to say it's one of these topics that has a way of just, getting very complicated when you look at it from a cross-border perspective, whereas here, domestically in the U.S., it's fairly simple. I think one of the many great things about this country is we have extremely flexible, gifting laws, right? So, it's very well established. You can give very generously in, pretty much any amount that you want. And the rules are pretty straightforward.
Yeah, and I think, in the U.S., one of the things that's changed for charitable gifting is, the standard deduction amount has increased, and things like state and local tax exemptions have decreased, so more and more people are no longer itemizing. And so in the U.S., and just as a general rule, if you do make a gift, it should be in a year when you are itemizing. And, if we're purely, and so this, sometimes when we chat to people about this stuff, our job in some sense is to remind people we are in this role kind of mercenary, right? Yes, by maximizing the tax efficiency of your giving, you can give more, but a lot of people, that's not their number one concern, right?
Yeah.
And so when we talk about this stuff, I think we can frequently come across as heartless or not caring or purely about the numbers, and that's not really the goal. I
don't know. This seems to be like the second podcast in short order that we talked about people giving their money away instead of hoarding it away and investing in it, Walkner Condon. So I think we're pretty generous.
Well, yes. I'm just saying, our professional role and our personal role, we should look at, sort of separately, because, with this sort of thing, one thing a lot of people do is they give every other year. When they itemize one year and they take standard deduction another. Right. And in those years that they are itemizing, then they give larger gifts or do things like that.
Right.
Makes perfect sense. Kind of standard financial planning tip, right? If you're looking at it from that standpoint.
It's a good tip.
Yeah.
Just like think about it, plan for it, and go large in the year that you plan to be philanthropic minded, because it will behoove you to itemize your deductions.
Yep. Right. And there are multiple ways of also doing this now. There's something called the donor advised fund, right? Which allows you as well. Another time when people are particularly philanthropic might be when they have a large liquidity event, a lot of money coming in. And so what you aim to do then is, maybe you don't want to scatter all the money to the charities all at that point.
Right.
You can make a charitable deductible donation to a donor advised fund and get it all in there, and then be able to distribute it to charities from there. And we'll kind of come back to the donor advised fund, because it is, I think in a lot of cases, a useful fund for Americans abroad as well, particularly if they're getting ready to move abroad.
Right.
Because, when we talk about how easy it is in the U.S., we have a pretty straightforward system. Charities register, they're approved. They're a 501c3, referring to the part of the tax code. That contribution is fully deductible. Contributions to political candidates don't work. Other contributions don't work. We have a pretty clear, straightforward system if you're giving within the confines of the United States.
Absolutely.
Right? So pretty straightforward. There's still some nuances and things to talk about. But what if, for instance, I want to give to a school in Ghana, or a school in Asia, or a project for building soccer fields for low-income youth in France, something like that, as Stan's shirt suggests.
This is kind of the charity that I'm supporting this morning.
Yeah. And so how do I do
Rugby,
that?
actually.
Well, and even if you're an American living in the United States, a donor-advised fund can be a good way to do that because the donor advised fund will require some records from the charity involved, but can help you give to things that may not be 501c3 registered. So you're in the United States, you want to support this project, your friend is building a school, donor advised fund, send it out. You're, able to gift that way. There are always, sort of steps along those lines to help with. And that's a good one. The other thing to look at is if you're helping, a lot of charities will align with a U.S. charity, or there'll be dual registered charities. So the charity might actively fund things in, another country, but they have a U.S. registered branch, which has the 501c3. Frequently, people giving to what we've seen recently, Palestinian or Israeli aid organizations, they have 501c3 registered. You can get the U.S. tax deduction and pass it out. The wrinkle, I think, there are wrinkles that you add on when you live abroad, right?
Right. Oh, yeah. There always are.
Yep. And I think in a lot of cases for this, where the big wrinkle comes, and now we're just talking about giving while you're alive, right? Because for the wrinkle, a lot of people like to leave bequests when they die.
Yeah. Which is, like kind of a separate topic. So let's stick to
living gifting.
Yes.
Yeah. Active gifting, not bequests.
Correct.
Right. That's a law school for Stan,
right,
sort of thing. And so if I'm living abroad, depending on where I'm living, that should and can affect how I'm giving money to charity, right? Because if I'm giving locally, great, awesome. That is not necessarily going to be deductible in the United States, but I may not want it to be because I am paying more tax in my country of residence.
Right.
Right. In fact, so after you've lived in a country that taxes income at a much higher rate than the United States, you're probably going to build up what is known as excess foreign tax credits, right? So even if you're extremely generous in 1 year in, say, Germany or the United Kingdom or, lots of Switzerland, wherever you might be, you may be able to get real tax relief there and still use those excess foreign tax credits from previous years to eliminate your U.S. tax liability on that income for that year.
Yeah, I mean, if you lower your taxes so much that you end up owing U.S. tax, great problem to have.
Right.
And in particular in the UK, this is an area where there are also dual registered charities. So lots of universities will have the charity set up. So basically it will help you equalize your taxes and you don't end up accidentally creating a tax burden in one country that you didn't think about and creating tax problems for yourself. But as Stan pointed out, in certain countries, a great way to use up tax credits is give a whole bunch of money away. Now, in the U.S., there are limits on how much you can give away vis-a-vis your income. And similarly, in foreign jurisdictions, there are limits on how much you can deduct on your taxes. And that's something, ultimately, I feel like this is our number one line. You should consult with a tax professional in your jurisdiction of residence.
Right.
Because you don't want to give, if you're, again, purely mercenary perspective looking at this, right? If you're looking at this from the purely mercenary perspective, you don't want to make a huge donation and then realize, I could only deduct 500 euros, 500 yen of that donation, or I could deduct
especially
zero.
500 yen. That'd be like nothing.
Wow.
But,
I or nothing, right? In some countries they don't recognize that as a way to do any sort of donation. So the first sort of question, if you're looking at it from a mercenary standpoint, and a lot of cases, widely universal organizations, UNICEF, all of these organizations, you can donate to the local representative and hopefully get some deduction. Europe is complicated. A lot of people view donations to the charitable arm of their church, right? Something like that. In Europe, sometimes that doesn't count because of how, some countries you have to pay, Germany in particular, a tax if you belong to a church. And so it works, again, a little bit differently. So that's something to kind of keep in the back of your mind, right? Is what am I donating to? How much can I get as a deduction? And am I doing it in the right country?
Exactly, right? So, in a way, it's kind of like you have to ask yourself, how will my country of residence treat the gift? And if you are a U.S. expat, you effectively have two countries of residence when it comes to taxes. And you kind of need to ask yourself, okay, I understand the tax implications in country A. Do I also understand them in the U.S. and how would the two interact, right? Because most countries around the world will also have rules when it comes to, okay, when are you allowed to deduct the gift from your taxable income? So in the same way that we have the requirement for the entity to be a 501c3, for example, then maybe your local country of residence would have similar rules that perhaps the charity needs to be registered locally, or maybe that it needs to be registered in the EU. And so it's very easy to potentially make a gift thinking, well, great, I'm making this gift, I'm going to get a tax deduction, when in fact you aren't, right? And maybe that doesn't matter, because what matters to you is just making the gift, right? So that goes back to the point you were making earlier about your motivations. But most people like, if they make the gift, to also enjoy the benefit of a tax deduction. And it's true that it's pretty straightforward to determine here in the U.S. It gets more complicated if you live abroad, because you may end up getting maybe deductions in one country, not in the other. And in that case, you need to ask yourself, well, will that deduction actually impact my bottom line, right? When it comes to my net tax exposure. Because if you live in a high tax country in Western Europe, for example, you can make a U.S. charitable donation that's going to lower your U.S. tax liability. But why? You don't have a U.S. tax liability because you pay so much taxes to your country of residence. Right?
You know what? What's also something that I think like a lot of expat viewers out there might be thinking to themselves is, when we tell them you need to consult with your accountant in your residence country, right? Is, hey, taxes in my country are real simple. The government pretty much does it for you and sends the form to you. Well, that's all fine and good, but would you let the IRS do your taxes, right? When you're doing something complicated to try to reduce your taxable income, it's maybe time to, at least go talk to maybe a tax consultant in your residence country that can help you, even if you normally do your tax. Yeah. Another wrinkle that I thought of that makes all the sense in the world for many people that come through our doors is, hey, you've owned Apple since 1985. You've got, you've got a cost basis of a nickel in each share of Apple now, and you've got thousands of shares. Maybe that's the best thing in the world that you could give to a charity, right?
Yeah.
Because charities don't pay income tax, but you do. Give it to the charity, right? The U.S. has rules. I'm guessing every country outside of this country, has its own interpretation of what the tax consequences of doing that would be.
Yep.
And what you count as the size of the gift, and is it within the limits, and so on and so forth, right?
Yeah, and each country may value that gift. Appreciated stock or stock we value differently versus its market value, or because it's costing the government money in you giving it, or things like that are all.
It's eliminating a lot of future taxes that you would pay, which is why it's so wonderful to do it.
Yeah. all kind of ways of looking at it. Yeah, and in these cases, yes, you should kind of look at it
absolutely
from that
so
perspective.
More sophisticated gifting strategies like low basis gifting money from an IRA. Okay, this is fairly restricted. Even in the U.S., if you do it on a cross-border in a cross-border situation, then you have to take a position as to how the local country of residence would look at that type of transaction.
But in certain countries where the right of taxation stays with the U.S., and they don't tax on it, it can be a really great way of lowering taxable income in the U.S. is giving from that and looking at that. The kind of final thing that I want to say is that, we kind of dive in here on the mercenary side of things. Ultimately, the motivation for that is the more tax efficient your gift is, hopefully it leads you to be more generous, right?
Exactly.
And frees up more money for gifting. I was going to give $1,000, but wait, I don't need to sell that stock to generate it. And,
absolutely.
Then I can give $2,000 or something like that.
Exactly.
So that's why we're mercenary in this conversation, is we hope.
But it's for a good cause.
Yeah, exactly.
And that's absolutely right. And also, it's worth mentioning as well that you can make a big mistake with your gifting strategy, and you can do something that's going to end up costing you money, right?
Yeah.
So that's kind of hard to do in the U.S., but in some countries that have very restrictive gifting rules, right? I'm thinking in particular about countries that don't like gifts being made outside your bloodline and have very punitive tax rates for gifting to individuals who are not immediately related to you or to entities that are effectively third parties. If you make a gift in good faith to a U.S. charity and you make a fairly large gift, potentially you could be in a situation where that gift is not recognized as a valid charitable donation in your country of residence and is effectively a gift that is fall within the realm of just gift taxes and all sorts of stuff like that in your country of residence. So you have to be a bit careful. You don't want to find yourself owing 40% gift tax or something like that because, you finally were able to make that large gift to a cause that was important to you.
Yeah, I think that's exactly right. So Stan, any final thoughts? I think
Yeah. Well, kind of like Sil said, we want you to be charitable to the people that need money and not the governments in the countries where you live that are already probably being somewhat charitable by paying the amount of taxes you already pay to them, right?
Absolutely.
So if you like the content that we talked about today, feel free to comment in the sections if you're watching this on YouTube. And if you are watching this on YouTube and you want to future alerts about content like this, subscribe to our channel. And don't forget to hit the like button if you like what we're doing and want to support our channel. Thank you.
That's it for today. Thanks a lot for listening, everyone.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.